guys, and glad to have you on board again today. We have a lot to talk about. First of all, we're going to talk about indices real quick and then switching to the raging crypto markets. We still keep on going to the upside, and there's a lot of action out there. So anyway, first of all, real quick, S&P 500, interesting session yesterday. Actually, we should have a look at this one on the cash session. So pretty much the same, okay? Doji candle closing below the open, taking profit pattern triggered, still not yet validated or confirmed by a triangle, so we're still waiting for it. Price is okay, which means any downside price will create the triangle. But we're also dealing with the same old stupid stuff out there, meaning that we have quite a contracted momentum, lots of compression, lacking of volatility. Still, my personal favorite being that the pattern is a wave 1 extended, so normally wave 2 should be shorter in terms of duration, and we're already more than halfway through it, so normally we should find a reversal pretty much nearby. So that's not a reason to start getting into the S&P 500. On the opposite hand, we're still having quite of a mixed feeling out there, and retail traders getting to short. They are actually short selling to a level that we haven't seen before. It's kind of enormous piled up a bearish position right now into the S&P 500, still leading me to believe that this is not the appropriate context for a reversal trading with aggressive position sizing. So I'm still trading very cautiously, actually not trading at the moment, but looking closely at the S&P 500, expecting that at some point we might eventually get the same reversal to the opposite direction. We can clearly see that this is more about breaking resistances, and now we can also confirm that this is also about breaking supports. So we've got this widening structure in which we get more and more boosted to get either one way or the other. But as you can see, this trend line now, the next time it could be crossed to the upside, could very well trigger the 50% level I'm caring about, meaning that if we are surging to the downside, people may rapidly turn out to be net bullish in the market, fueling more downside. So we'll still see about that. That is still the speculative behavior. I'm looking to actually confirm that we have the first swing for this year. The problem is, technically speaking, we're still facing the same old problems, in which that last week has been totally invalidating the January reversal potential. Still questioning, in my personal behavior, if February is going to be the reversal month, and that's all depending on where we're going to close February this month, because of course we're trying to close on top of the resistant context now, which is exactly what we want to trigger reversal patterns, because we're on top of the higher time frame context, we're on top of the trend channel, and we're on top of the context. So 3 time frames trading above their requirements for bearish actions. So this is definitely a speculative area for reversal traders. We do have signals supporting this. So it's all about, well, when do we reverse? It's not if, it's really all about when. And the problem, as we can see, is that as long as the retail traders are betting on the same side, I'm not confident enough to pile up bearish positions. So I'm still having the same old attitude in the market. I am covered. The portfolio is covered for the 1-to-1, meaning that I have that many dollars to the upside on the investment portfolio. I'm investing the same exact position sizing on derivative short selling and the broad market S&P 500 and a tiny little bit on Russell. So I'm waiting for it to trigger. Until it does, I do nothing but just waiting, which means I'm taking some gains on the investment portfolio that is overperforming the S&P 500, but I am still covered just in case the broad market were on a huge sell-off. Okay, so until then, no reason to be aggressively buying the market or selling it. It's more about the fact that planets do not align. Volatility is low, and even though lots of things might be happening in the real world, the market doesn't nearly give a shit. So low volatility, low pressure on prices, and aggressive retail traders getting to short sell the market and sell and sell and sell and sell is just fueling lower volatility and more patience. Okay, so that is what the smart money is doing right now. We all know that things could rapidly change, but still, as long as retailers are buying or selling, we might want to be cautious with short selling. Okay, covering portfolios, definitely a big fucking yes. Going net bearish, absolutely big fucking no, not now. We're waiting for prices to suggest confirmations. If we have a look at shorter time frames intraday based, we might have a third range boundary coming nearby. That would be a 15-minute chart reference time frame. We definitely have the two sets of waves leading us back there. I kind of like that. So in here would be an absolutely gorgeous standard third range boundary. That one could be negatively traded. We've made several candle closes below the context, but we still have made hell of a lower shadow in here. So I would still question the fact about the probabilities for this one to be sold, because of course trading inside the resistant context, even though you have 76% fib, requires a suitable context for bear range to be traded, bearish range, which I would say we do not have. We need to close context boxes. We need to close prices below the context. So we did close this one right in here. So can you consider this closing below the context? I would say, well, that's pretty much closing right at average prices with a lower shadow candle. So it's mixed feeling for me. I would say I don't really know if this third range boundary is going to be risk limited enough to go against that. So there is still a third range boundary, which means trading it or not is not really what matters out there. It's really, this is the low risk area into a neutral range, into a chaotic range structure. So whatever the fuck happens out there matters a lot. This is where professionals will risk manage the probabilities of going higher and lower. So this is the area of interest. Have a look at prices today on the S&P 500 into this area. This really, really cares a lot for me. Okay? So I'm still waiting to figure out what the fuck is going to happen out there. If the third range boundary validates, then I will probably start looking at reinforcing bearish exposition and trying to be slightly, but still going into net bearish territory. Of course, if the third range boundary is squeezed, then that will give us, for experienced traders, the 1-to-1 ratio to go aggressively selling the next time. Until then, navigating in between, boring structures, and so on, okay? We need to be real cautious. We have cycle properly aligned for a bearish reversal, but we have to figure out that the risk isn't very well limited. So if you're going on the third range boundary in here, and I tend to believe that if some signals show up, this can be done, but needs to be trending signals. And if those trending signals show up, take them with half a position sizing. Don't go for 1.5 or 2% risk taking on these types of trade. 1% maximum risk on capital for these types of things, because there are several chances that these things could just be squeezed third range boundary. But trade them. I mean, in my personal opinion, if there is a trending signal on a 15-minute, which is, oh damn it, this is the case. So trending signals must be on the trend channel. So we need to have these price tested, and if these prices are resisting on the S&P 500, then there is a huge chance for this market to validate the third range boundary and eventually confirm the trade. We'll see all about that, but this is really what matters today into the S&P 500. All right, cryptocurrencies now. Oh, first of all, WTI. This motherfucker is really a pain in the fucking ass. I've hardly seen such a complicated market to navigate. Everyone's willing to buy that shit, so we know that if we reverse, it's going to be for buying entries. So feels like the market is just posting for bearish trades, stop losses. So I'm still waiting into this market because it feels absolutely out of any rational standards for pricing, but it feels like it's just not feeling gravity, just like there is no sense of gravity into the stock market. They are both correlated right now into very stupid low volatile context, basically waiting for something to actually hit the market, because in the same time researchers are getting to sell, and as more people sell, there is just one more reason to just sell puts and not moving price actions. Okay, so very complicated stuff to navigate. Regarding the Forex, still paying a lot of attention to whatever the fuck happens with the yen, because either this is a strong sign of bears to taking over the prices anytime the bulls try to rage, and we'll just range in here before pushing lower. That's exactly my favorite scenario right now, but I don't have suitable prices for a reinforcement right now. So I'm just patiently waiting for the range to mature, and I'll see for potential breakout trades later on. I got them like this trend line. I think we're going to get to trade there again. And if we break it down, then this is where the ugly shit might be triggering. All right, AUDNZD is still performing pretty well, quite of a recovery. I'm very glad we bought this bottom. Now just let it happen. Let it patiently behave, not being too aggressive and stuff like that. But this is a positive reaction for me. That tells me that people are getting into buying average prices in the AUDNZD. Could be a positive sign for the future. But as long as we do not break the previous resistance, don't overexcite yourself. It could be a very long and painful range for those who are not suitable enough, impatience biases, not to mention these. Okay, so don't be too greedy. Things don't have to go out there in a straight line. We could range for a little while before actually turning out to validate. Okay, that aside, let's get right into cryptocurrencies. This is where the shit happens now. IOTA, oh my beauty. So this is really gorgeous movement on IOTA, really worth waiting. And just like I said, we totally fucked up validation and confirmation level, going straight up to the resistance demand. We're into areas in which some people who bought the lows might be starting to lock on some gains, but as usual, those who bought in here, they really took some risk. This is investment capital in here, not venture capitalists. It's really all about when these areas are reached out to, generally the guys who bought and hold just like I did will just release like 25% of the coins, no more than that. So very limited supply that mostly depend on the demand. So if the demand is sustained, then the next level is just doubling prices. So is there still some potential on IOTA? Fuck yes, there is. Okay, next. Some individual blockchains still gathering interest for me. Remember about the major plan shared on the weekly scenarios. The thing is that we have multiple scenarios, multiple bubbles, multiple pockets of liquidity. The first one being, remember, Bitcoin, definitely the biggest one right now. This guy has some safe haven demand, kind of a digital gold. Then we've got Ethereum in its own separate bubble. Not bubbles, okay? Liquidity areas. Okay, Ethereum has a separate type of trend going on. It is more like an anticipated growth that is priced into Ethereum. Then we've got all other competitive proprietary blockchains already at work. Okay, I'm talking about the projects that have been started later on, like a few years ago, 4 to 5 years ago, that have been implemented, working right now, and they are looking for demands, they're looking for clients. Okay, so these bubbles, these liquidity pockets, I'm not talking about the newcomers, I'm talking about the guys that are into the system for years, working and developing the blockchains for clear and clean demands. Okay, so these guys I think are on the verge to start trending after Ethereum, because of course Ethereum is the most consensual blockchain out there. EVM, is it going to be in the future? Everyone just says basically yes. That's the reason why it's trending by anticipation. And finally, last but not least, all of the venture capital sub-chain stuff. Okay, remember about that. So this is all about that. I created some kind of a weird index, Cardano, Stellar, Ripple, EOS, XMR, LTC, TRX, BNB as an altcoin blockchain, guys. Okay, the third bubble, the third liquidity pocket. And as you can see, these guys are looking for resistances, but they're also changing the pace. They're accelerating prices. That's what that thing means. Okay, we're breaking cycles and we're accelerating prices. So we're looking for higher valuations on this thing, but we're facing resistances. There's a battle going on, bulls versus bears, but the bulls definitely have the momentum. They have overlapping structures. Definitely a strong thing as we come out of a crashing structure, losing 95% and going down to very low volatility, meaning that some guys bought and hold, and you know the drill. They've been 25% profit taken out there, and now they are confirming their investment. We need me to believe that we did some good job with those sub-chains, with those altcoins. So the question is, how far is this thing willing to go? Normally we are in a trending wave, and I think that we have the potential to break that resistance level and holding a few candle close on top of the resistant context. I don't think these things can skyrocket to all-time highs and stuff like that, but still there could be, okay? And finally, others where the liquidity pocket for venture capital mostly is, and as you can see, all-time highs for quite a long time, but we're definitely into venture territory out there. There are some good stuff in there. There's some shitty stuff. And don't get me wrong, this thing will retrace very violently, pretty much, I think, to this area, but it's not going to be like okay, everyone's just gonna consolidate for a 40% drop, 40, 50, and then we'll recover. It's not about that. It's really going to be yet another K-shaped recovery stuff, okay? Because out of this, some assets will consolidate and then some will recover. Some will get there and go lower. Really K-shaped stuff, okay? Meaning that this asset is supposed to be staying neutral for a little while until, of course, money always braces for the best option in the market. We're always seeing the glass halfway filled. So it's pretty much like these guys will lose valuation going down slowly but steadily towards zero in the future, as some assets will gather more capital and capital and capital, which means sooner or later we'll get to reactivate because these guys will just dry out, and some good assets in there will survive and gather more capital. Okay, so think about that key-shaped. That is the next big thing to figure out. Which ones are the good projects we're on, which one are the bullshit projects that would just be that was just scams or white papers without backing, or totally futuristic projects, not even mentioning that they're not even going to be able to fit what they sold. So this is really all about that. There's really a lot of energy right now into the crypto sector. This is definitely a bubble. Don't get me wrong, the sub-alt sector is in a bubble mode right now. There will be some guys who will die, some others might retain capital. All right, so that's pretty much all about it. And over this, I'm still caring about one specific stuff because I think this is where the money could play. Okay, these guys are in advance. They're far advanced. This is a bubble. I'm not willing to buy the bubble, so I think it's too late. I bought myself into some specific asset like IFE or Solana or Elrond Gold. They have been performing quite well, and they could still have a little bit of potential. But I think these assets are among the one that will positively recover the key shape. They're still going to lose 40%. Don't get me wrong, at least 40%. But I'm still hoping these guys will be among the one that will recover and eventually 1 to 2 years from now be able to produce some growth. But really we're far away from the actual growth to come up for these guys. Okay, so really anticipated growth, venture capitalism out there, capital risk. Okay, where I think this is where the smart money is at play right now. Okay, like I said, we had all validations on most of the blockchains. We're looking at confirmations, and I can see some blockchain, and specifically Stellar Lumens, which has the exact same structure as the Indis. Okay, it feels like these guys are the same. Okay, so this is why I think if there is some upside potential on the Indis, I think it can mostly be done through Stellar Lumen. You know that Stellar has a hell of an accumulation structure going on at the moment. I'm still questioning whether or not we'll succeed going into the top 50% of that chain channel. And if we do such a thing, there are overlapping structure proceeding, leading me to believe that there is hardly going to be a resistance out there. I'll still paying attention, okay? But if we get out there, there's a reasonable probability that the market just skyrockets and goes out of control. Kind of a wave 5 stupid extended stuff, and God knows where this thing could go. And I'm still thinking about the probability that Stellar Lumens could eventually, if there's really crazy skyrocketing demand, could be the first sub-chain, the first proprietary blockchain to go all-time highs after Ethereum. I still think that this is the one that has that potential. It goes way beyond that, the structures of supplies and demand and volume, leading me to go to that conclusion, and I can hardly explain it all right now. But that's the thing. I'm still betting on this one. That's a gamble, of course. So if I'm wrong, I'm going to trigger some stop losses. But I'm still waiting for prices to confirm to enter the breakout trade. That being said, I think it's pretty much all about it for today. So yeah, it has been a hell of a good day yesterday. Teller has reached out my profit taking area. IOTA is as well. So it's really that's all across the board, all the trades validated, some now confirmed. This is just validation for IOTA, leading me to believe that if these guys wants to go higher, there's plenty of room to just double the current prices. The first resistances are much higher than that. So this is just reactivation. This is validation for IOTA. I think there is much higher potential down the road. Okay, so interesting crypto sector is not yet over. Bitcoin is still having quite some room to improve and increase prices. We could still go 50, 52K, so there is still some room to the upside. The momentum is favorable right now. We just terminated a consolidation cycle. No reversal signals on the market top, still leading me to believe that a 1-to-1 ratio around 50K could be reached out to within the next few days. You can see the trend channel kept pushing up, so ranging for a bit, giving some room for prices to the upside, and then I think later on final push eventually to get to test the 50K area, and then we'll see what this is all about. In the same time, Bitcoin dominance is still working around this trend line. Big question over whether or not we're going to oscillate across, oscillate below, or maintain prices above. Just like I said, don't gamble on the dominance right now. It's really very, very, very undecisive. All right, that's pretty much all about it. 20 minutes in. Sorry, but I had a lot to talk about. Bye, guys.